Hello and welcome to the Blockchain and Us, where pioneers and thought leaders talk about their journey in blockchain technology, crypto assets, and the token economy. And I'm your host, Manuel Staggers. If you enjoy this podcast, please give it a top rating and review on iTunes, and feel free to follow me on Twitter at Manuel Staggers. This episode has support from Shift Crypto Security, the maker of Bitbox, a minimalist hardware wallet for cryptocurrencies. Bitbox is rock solid, compact, portable, easy to use, and designed and manufactured in Switzerland. To learn more and get your wallet today, visit www.shiftcrypto.ch. Today's guest is Rik Willard, the founder of Agentic Group, a New York-based federation of over 50 blockchain companies worldwide, and interim CEO of Global Blockchain Technologies, a publicly traded blockchain investment firm. Rik is a fellow at the Foreign Policy Association, an advisor to the Field Center for Entrepreneurship at Baruch College, and other board appointments. He's also a public speaker and has appeared at the World Web Forum, the European IP Summit, Finance 2.0, the Emerging Links Blockchain Series, Harvard Business School, Dow Jones, and Davos 2018. And now to the interview. Hello, Rik, and thanks a lot for taking time today.
Hi, Manuel. Great to be here. Thank you.
Rik, you were one of the interviews in my film, The Blockchain and Us, and in that film, you spoke a lot about the potential of the blockchain to create a better world. How have you seen the blockchain create a better world in the last few years?
You know, that is realized in many different ways. And I have what I've seen and what I've been involved with, I can say has been nothing short of eye-opening. There are people who we're involved with who are into identity, and obviously the refugee situation is getting worse around the world, and there are people who are essentially stateless, who need a sort of identification solution. So people working with the UN, there are people working on financial inclusion, and the tokenization movement has done a lot to further that cause, sort of helping people create new forms of value, which we're very much aligned with at Agentic. And we are creating a sort of what we term an exonomy, exponential economies outside of the purview of the banking economy, and more in the creation and the extrusion of real forms of value, be it physical value with goods, be it intellectual capital and value with ideas or services. And so the tokenization movement, it has been instrumental in helping us understand and bring those forms of value out to the fore.
Has your view about how the blockchain can achieve that goal, to end poverty or maybe at least reduce poverty, has that changed in the last 18 months?
Yes, I think that the concepts are becoming more refined. They were pretty raw when we last spoke. Because all of this is quite new, obviously. And we've seen, let's say, from a regulatory approach, the US, Switzerland, and others, the EU, begin to take sort of more substantive stances on what these tokens are. In some cases in the US, they really focused more on the securitized aspect, like a stock, whereas in other parts of the world, we're really talking about access tokens, access into platforms that can create these new forms of value, or that can provide those lever points for, the creation of this new form of value or these new forms of value. But in general, everything in this space that is tokenized can, but certainly should, be pointed to financial inclusion. And when it's not, it's done deliberately for very 20th century reasons. But moving humanity forward in the 21st century, all of these should be about creating new forms of value. All of these applications should be about including the rest of the world, the billions of people that have been excluded from value creation, to be able to leverage that which they have as a community to their own benefit and to the benefit of other humans around the world.
What kind of examples have you seen, where you thought, oh yeah, this is really good execution of that idea?
A lot of these things, remember, are being developed by people who are in technology or people who are in finance. And it's difficult for many people to see through other lenses than that which they have already been a part of for sometimes, decades and sometimes just a few years. So these are emerging. But I'll tell you some of the things that we're doing that I think are germane to this. So we've taken a private equity firm, an existing successful private equity firm called Muirfield, and worked with Muirfield in Boston to tokenize their private equity platform. So what they do is they get people to invest in their private equity fund, and then they go out and they do different real estate projects in America. They have a consistently high return. However, the people that they're serving, their clients, their investors, have to be in the U.S. essentially what we call pre-vetted investors. They have to be investors that have at least $1 million in income. Accredited investors, thank you, who then who have $250,000 to lose should they lose it. Now, that being said, that they get high returns from those investments, and Muirfield's very, very good at doing that, very well established in doing that in the mid-market. But the average person never gets those kinds of returns. The average person around the world never even knows that this PE fund exists, much less get a return. So that investor, say in Sri Lanka or Kenya or Brazil or for that matter, Estonia or wherever, now has the opportunity to get the kind of returns that have only usually been really cordoned off for people who already have money. So as you know, it's expensive to be poor. It's also advantageous to be rich in the thinking of the last several centuries. However, now we have the opportunity to include people who don't have as much, who aren't necessarily wealthy, but can afford to lose, say, or invest $1,000. $5,000. All of a sudden, they have access to the kind of returns and wealth creation that only the wealthy have had before.
I mean, return also goes hand in hand with risk taking. So how do you reconcile those two things?
Yeah, there is always a risk. If you're trying to put your money to work as an investment, there simply is a risk. Not everything works. So we try very hard to work with established entities, no matter what they are, and they could even be organizations instead of companies or funds that have a track record of some sort of success, at least are fairly stable. So we work with them to tokenize their asset and to make that more open and more accessible. So there are always going to be more speculative, risk-heavy investments that will be out there for people, and it really depends on one's risk appetite. And what they'd like to get into, but you should have the choice of doing it. And as long as the tokens, on a blockchain provide enough transparency and liquidity for you to be able to make a decision to get out of a fund, or to stay in a fund, or you can say to yourself, hey, I know this is high risk, but I'm willing to bet $500, $1,000, or whatever it happens to be, with the idea that you're going to lose it. Now, that's the nature of investments, and that really can't be changed. Mm-hmm. However, it's the access that has been locked out, since time immemorial, since the beginning of investments almost. Now, of course, this was meant to protect people from losing money, but the nature of investments, again, is such that there is always a risk of losing money. There's a higher risk or a lower risk. What we have yet to see, but what we are going to see, say, in digital artworks, in digital media, we're seeing sort of the blockchaining and provenance of art, which is coming, which is itself a sort of new market that's being opened up again, but to investors, people who are either creating the art or investing in the appreciation of the asset itself. So,
do you mean digital art or tokenizing, like real existing art, like a painting or something like that?
Right now, I mean digital art,
like crypto kitties.
Well, that's it. That's arguably art, and it is sort of the pet rock of the blockchain right now.
Right, exactly.
But that being said, there's always going to be those things as well, and why not? Let 100 ideas, let 1,000 ideas, let 1,000,000 ideas bubble up, and let's see what resonates. I mean, it's still very early in this space. If CryptoKitties is something that people like, well, then people liked Beanie Babies as well, right? And that was a very very physical, very tactile, very non-digital thing. But a certain population will always like those kinds of things. So why not have them on the blockchain as well?
Absolutely. I mean, there's two themes here, right? One is, I mean, obviously access that you said before. Then you have liquidity and breaking down these big chunks into smaller chunks. And then you have digital scarcity, right? I mean, in what you just described with CryptoKitties or similar digital assets. What other things does blockchain technology make uniquely possible?
I think we're going to see a large push in blockchain health and wellness services. I think there are platforms like BitMed in San Francisco, Rejuvenin, which is being a platform that's already built, but being blockchain by the amazingly successful Fred Nazem, who used to run and actually turned around Oxford Health Plans years ago. So you have these really fantastic, successful players coming into the space who we help to understand the blockchain and how that can be tied to what they do and what they're very good at. So these platforms are talking about, okay, for your engagement and your permissioned data, when you want to give it to us and you can hold back whatever you want, then we'll turn around and use that data for trials and things like that. And you're accruing tokens that then allow you to get free or low cost medical care. This is revolutionary stuff. So this is opening up medical care to the entire world. Now, of course, there are lots of details like signing up, a critical mass of doctors and groups and insurance and all kinds of things. But that's in the works right now. I mean, there will come a time when we can envision that high quality medical care, at least medical consultation, is free for almost anyone. And just a matter of engaging with the platform.
But how exactly does that work? I mean, medical care is something very physical, right? And how do you bridge that gap with the technology that was meant originally just for the transfer of digital currency? I mean,
right.
how do you reconcile the two?
What I can tell you, certain parts are still under construction, as it were, so I can't really tell you a lot about that. What I can tell you is that there is a coming intersection between blockchain and the digital engagement and physical brick and mortar spaces. That's coming. That's being actually planned as you and I speak. And some of the people that we're engaged with that I spoke about just earlier, are forerunners in that space in a global sense. So don't be surprised if you talk about access to the physical care itself, to the health care itself, that there'll be brick and mortar establishments that are tied into these digital platforms. So the engagement happens digitally, but healthcare itself proper, can happen in a more traditional setting like a clinic or whatever.
Is that, I mean, these kind of health tokens, right, for the lack of a better word, is there a way to invest in those as well, or are they more kind of a utility?
And that's a question as well. There are things that we know are access and utility tokens. There are things that we know that are securitized assets, that are secure tokens. What we're moving towards is a new mode of value that's in between those two extremes, those two polar extremes. And that's the holy grail of this entire space as far as I'm concerned. But we need a new taxonomy. We need new use cases to bubble up, like the ones that I'm inferring, to right now. These have yet to be, truly established and driven and even created. They're all in planning stages. Just remember, again, this is very early on in this evolution of value. So, the kinds of things that have been thought through over the past few years are just now beginning to see the light of day. But yes, they will be engagement on one side, which are sort of non-fungible tokens. And then there is a part where it's an investment, which is a more fungible, security-driven token. But we have yet to be able to describe, even from a regulatory standpoint, much less a marketing standpoint, that sort of taxonomy that creates a known entity for that kind of token. But it's something that we deal with every day. It's something that the think tank portion of Agentic deals with every day, and the consulting part of Agentic deals with every day. So the question is well founded, but the answer is, we are not quite there yet. There are a lot of ideas, but as far as something you can point your finger to and attach metrics to, we're hardly there with anything in this space yet. There are no true hard metrics. You can't say, here's 10 years of data that allows us to understand how this token works, right? It just doesn't exist.
Yes, but I'm sure that sometimes also opens you up to criticism, right?
Of course.
Have you had people ask you, hey, do you really need a blockchain? Do you really need tokens for that? Couldn't you just encrypt it better or decentralize some of the, the data storage? What do you say to them?
Mm-hmm. I say you're right. Blockchains themselves as a technology do not cure cancer, and not every platform requires blockchains or tokens, quite frankly. However, in those platforms that are talking about new value creation, the best way to get there from here is a tokenized platform, because that gives you the apparatus that allows this sort of peer-to-peer value transfer happen more elegantly, more quickly, and with less friction. So there are some things that really do benefit with blockchain and tokenization, and some things that may not. So I'm very open to hearing cases where they don't make sense. I've actually told clients who've come to me, or prospective clients who've said, will you work with us? And I've said to them, well, you don't really need this. But it's all on a case-by-case basis. And I think that at the end of the day, not everything needs to be tokenized. If I buy a blender, if I'm blending a shake, does that need to be tokenized? Probably not. From an IoT perspective, it might be. It might say, hey, you need 20% more orange juice or whatever, but that's a different story. That's not in our realm of action.
Yeah, I just wanted to ask you about some examples, that you thought lately, or that you encountered lately, where you thought, oh, tokenization really doesn't make any sense here. But you made the example with the blender. But is there another one?
Well, let's see. What really didn't make sense? I tend to dismiss those that I don't think make sense right away, so I don't think about them very much, to be honest with you.
Well, maybe
put them out of my mind.
Let's try to find one where it would seem like first it makes a lot of sense, but then on closer inspection you found, oh, you know what? It actually doesn't.
Well, let's go back to your question about art. Okay. Can and should you blockchain, say, the work of the masters? Okay, the Renaissance masters, let's just say.
Right.
It's very difficult to do that. Where are you going to put the identifying tag, and who can't just rip it off, and put it on a fake, right? But also you have inherent in the industry itself of, say, that high art sector, it's rife with corruption. There's more, value in fakes and underground movement of these, high value works of arts than in the actual reported value of the space itself. You hear that it's like 150 billion in artwork. That's like sort of, I believe that's the number that is on the books, and a couple of $1 trillion off the books, right? So that dwarfs the actual stated value of the space. But that's all underground. That's all gray area. That's all. So that sector doesn't even want the blockchain. Not only is it almost impossible to blockchain those existing items that are physical items, but the sector doesn't even really want it, because that's not where the money is made in the space. Now, digital art is very different, and you get to sort of digital rights management for music, digital rights management for video and images. All that's very important, because, as you know, the internet is one big Xerox machine. So to be able to get paid for your work, now that deserves tokenization. That is a blockchain application. Just rights management alone, but also with a blockchain and tokens, you can not only do the DRM, but you can also affect the payment rails. So those tokens then have, have a dual direction value. If I use your photo, well, then I pay for it. That's tokenized. You get those tokens in your wallet as the creator, and then you can take them into any other thing, Bitcoin, Ether, or fiat, or whatever you want to take them out in. So that's the great boon to creativity on the internet itself. But physical assets like art may not require, nor may not be the best case for blockchains. That's, I think, one really good example of I think another one would be we're rushing into government acceptance of blockchains for all kinds of things. Let's just say for government identity, which is
right.
on face value not a bad idea, right? But also remember that if a government has one-stop access to all of one's information, then that's also slightly problematic in the wrong hands with the wrong government. It can be a very totalitarian tool, as well as a very liberating tool. It depends on whose hands it's in. So the need to have for governments decentralized applications, which they actually are now, they're just inefficient decentralized applications. You still have to get permission, say, for the CIA to access certain parts of your life. They may do it illegally, but they have to actually get permission. Or the FBI or the IRS or anybody else. What you don't want is one switch to turn a person off,
right,
to turn their entire life off. So again, we have to watch the narratives that we create in this space, and we have to watch the use cases very carefully. This is an ongoing issue for anybody in this space. What we don't want is for people to have total access of a human being and their livelihoods. We want people to be able to move freely. We want enough to be decentralized that the person has access and permissioned environments for their own personal data and for their own privacy.
Rik, how do you go about understanding all the ins and outs of the technology? I mean, I sometimes struggle with that, right? Because I'm not a programmer. But how do you and your team, how do you get your information about what are good applications and what applications maybe need more development?
Well, we listen a lot. we have because Agentic was born from a think tank. Our DNA is one of acute listening. And because we have a federation of over 50 companies around the world, they're actively working in this space, and that's our technology agnostic. They're working with Ethereum, they're working with Bitcoin, they're working with Neo, they're working with whomever. We get a lot of intellectual capital that comes across our desk every day from all over the world. So part of our mandate as a company is to sift through that information and sort of look at what works and what doesn't, what might work later, or what we thought would work but actually isn't working now. All of those considerations are part and parcel of the vetted environment that we create for our clients and our partners.
But do you have advisors there, or is it all in-house? I mean, how do you go about finding the best experts in this field?
Well, we started at the very beginning of the explosion. I mean, the think tank opened in late 2011, which was pretty much, day zero of the commercialization of digital currencies and blockchain. So we have the unique benefit of knowing many of the relevant players in the space, and we have known them since the beginning, and they've known us. So they're very open with us because we're very known. Agentic as a brand is very known for being a good housekeeping seal of companies and a good housekeeping seal of advisors and consultants, people who are known, people who have been vetted, and people who are contributing on a very high level to the space.
Cool. And you're located in New York, right? Mainly.
We are based in New York. We have presence in San Francisco. We have a presence in Vancouver. We have a presence in France. Used to have a presence in England, not so much now. We have feet on the ground and a presence in Switzerland, and also in Brazil, and soon in Kenya and Korea.
Fantastic. But as a headquarters, do you find New York to be a good location to stay kind of on the forefront of this technology?
Yeah, New York is still sort of the media and news capital of the world. And while it may be being challenged by other locations, it still maintains that the sort of industry superiority in that regard. Everyone, every news service in the world has a presence here. So we get a lot of information, not only obviously from our member companies and our associates and partners, but also we keep our ear very close to the ground when it comes to the news services, et cetera, which give us sort of a leg up, and we get to interact with those people who are reporting the news, which again adds to our insight, especially as to what the public may be thinking about all of this.
Mm-hmm. Rick, you also mentioned you have a presence in all of these other countries, right? I mean, on the West Coast, but then Europe, Switzerland, also Africa. Do you see people in those locations focusing on different kinds of approaches to blockchain technology than, let's say, maybe in the US?
Absolutely. That's really a great question. Agentic actually was formed on a couple of basic premises. And one of them was that this is a global explosion of value, a global revolution, not just in technology, but in the concept of value access, and value creation, which strikes directly at our values, but that's another part of the story. The part that I'm concerned with your question is, what are people building around the world? And the interesting thing is that you'll find people, say in Kenya, building blockchains and applications that are so far reaching that they can't even be implemented in Kenya, right? So we provide a network that allows them to be accessed easily and more frictionlessly by people, say in San Francisco, who it may be appropriate, to launch that kind of technology, and vice versa. There's enabling technologies or financial inclusion technologies being built in the West that might be absolutely appropriate or more appropriate for, say, Southeast Asia, right? So, we see this a lot, actually. People they're building and building and building everywhere, but it doesn't necessarily work where they are. But more than likely, there's another place where it fits just fine, and it can spread and grow from that other location. So, the idea of being networked and being closely networked in this space is critical to its growth, because it can happen anywhere. This sort of freshness, this sort of amazing thinking and development from a technology standpoint can literally happen in a basement in a shack in Rwanda, as well as it could happen in, say, Zug, Switzerland. There is no barrier, to that sort of value creation anymore.
Got it. I mean, one barrier is the talent a little bit, right? And that's an ongoing conversation here in Switzerland. I mean, where do you see the talent concentrating?
Well, I see talent is generally, of course, concentrated mostly in the Western world, of course, in developed countries. But that's also changing. There are lots of sort of both over and underground, developer sites that have thousands of developers on them that are not restricted by physical boundaries, right? Who simply react to a call for development on Ethereum, call development on C++, on Bitcoin, the Bitcoin blockchain, Bitcoin Cash, Zcash, what have you. And there are people around the world who are answering these calls. Now, again, that's going to flatten out pretty soon, because code, transferred along the internet rails, are non-respective of borders. Borders don't even count, because I can send you code. I can send code to you in Switzerland right now in a matter of seconds. So it doesn't matter where I am. So that's flattening out, as we speak, and will continue to flatten out until geography simply doesn't matter anymore. And when education reaches a critical mass and that tipping point, then it won't matter where you are. You'll have a physical, a localized pool of talent, as well as an online, non-geographically available pool of talent.
Interesting. I mean, when you speak in countries all around the world, right? And I'm sure you travel a lot too. So have you seen a difference in how people understand? I mean, more from the consumer or the user side, how they understand what's possible with blockchain technology? I mean, there's now a lot of investment funds popping up, but maybe in other countries, right? Southeast Asia, or you mentioned Africa. Have you seen people demanding different applications in different areas?
Definitely. And I'll answer that, and I'll start answering that by saying that everyone got into the space for different reasons as well. Some people only saw financial inclusion and social benefit. Some people only saw finance, like say a Barry Silbert, who brought his ideas of second market into the Bitcoin space to start his fund. For me, I came from marketing and advertising, and I saw Bitcoin as a sort of hyper elocuted loyalty point, an engagement token, which made sense because I had just come from working with MGM Resorts, and we were just getting into players points at the time where the crash happened, and I moved back to New York. So just a year later, being introduced to Bitcoin in 2011, I said, wow, if I had sort of this mindset when I was in Vegas and Macau or wherever I was for MGM, then this would have revolutionized the gaming industry, which it was doing anyway in a different kind of gaming. So the how you enter the field tends to be the lens in what you see, or you bring what you love and what you know into this space. So there are all kinds of applications blooming now that people from different spaces and different sectors are beginning to understand how a blockchain or a digital token might work in their business. So the answer is yes, there are as many, as big a number as there are people, there are potential applications for this. Every sector at least has one application. Now, not all applications, again, matter in this space, but there will be, those that we can't even foresee yet that will, revolutionize how we perceive finance, how we perceive value, how we perceive inclusion, how we perceive access.
Mm-hmm. When you originally got in touch with Bitcoin, right, in 2011, I think you said, what's the most attractive point of it? Was it the ideology of a flatter world and decentralized access to capital, or what attracted you originally to it?
It was the frictionless peer-to-peer value transfer. I thought that was the key to unlocking value in the internet, and it solved essentially, I believe it was called the 401 or 402 dilemma on the internet. So if you notice when you hit a website that doesn't exist, you see it says 404, this page does not exist. Well, the 401 page, I believe it was, if I'm correct, was the sort of the financial transfer page, the payments page. But that payments page never got built out. So that page still exists on servers doing nothing. So Bitcoin came and sort of moved into that space. So it solves I guess it's 402, the 402 dilemma, which was how do you move peer-to-peer payments on the internet? And that's what got me. But coming from where I came from, which is loyalty points and engagement, brand engagement, I said, well, this is a very powerful secondary economy. Already airline points are an economy unto themselves. Cell phone minutes are an economy unto themselves in certain parts of the world. So why not this? If this can represent those very tangible assets, then you're talking about building a multiplicity of economies that you then, not only do you not need banks, but banks are superfluous to it. In the U.S., the loyalty lobby is a multi-billion-dollar lobby. Loyalty points are very seriously around the world, and everyone uses them. Just ask, anybody who's got an Amazon card, if they have, sort of that's inclusion, right, into the financial world as much as to the world of consumer goods. So I sort of entered from that direction, but it became very clear to me what that meant. That meant that people can now create their own value. They can tokenize it. They can express it financially and be a part of the global evolution of value. And all they need, in many cases, is a cell phone, and in many cases, not even a smartphone. So once really smartphones, proliferate, and out of the 2.7, billion unbanked people in the world or so, most of them get their hands on an actual smartphone with an actual, wallet that's secure and an interface that they can easily use to trade tokens. We're going to see a huge explosion in the trading of these assets. You're going to see wealth created in the most unlikely places on earth. And that will be when the world changes.
Let's take a quick break for a message from our sponsors. Shift Crypto Security is the maker of Bitbox, a minimalist hardware wallet for cryptocurrencies. Storing your digital assets safely should be a priority, but software and phone wallets can't protect your assets from hackers and malware. The Bitbox can. Developed by a team of experts who combine Swiss pioneering spirit with a strong commitment to crypto security performance that is second to none, the Bitbox is rock solid, compact, portable, easy to use, and designed and manufactured in Switzerland. To learn more and get your wallet today, visit www.shiftcrypto.ch.
You're going to see wealth created in the most unlikely places on earth. And that will be when the world changes.
You mentioned that in our last interview. You said the $5 smartphone is just around the corner, and that will be groundbreaking, I think was the word you used.
Yeah, it's just like right down the street now, not even around the corner. They're pretty much, you have a lot of phone companies giving the handsets away with wallets on deck, preparing for these applications. There's a group that was down, I believe, in Venezuela recently. They're out of Los Angeles. And they went back. What they want to do is they want to create a local peer-to-peer economy. And I believe, I don't want to talk out of school, so I won't say which manufacturer, but a major mobile handset manufacturer gave them several thousand phones to equip these people, committed to that, and to equip these people with an apparatus that allows them to engage in this ecosystem. And that's big news. That's going to be happening more and more. Handsets are, they're not even important anymore. It's the access and the value created through the handsets that's important.
I mean, again, right, that was, I thought it was a fascinating point you made there, but it was also a point that some people criticized heavily, right, where they said, well, it's the last thing people need is a smartphone if they're hungry.
Right.
What would you say to something like that?
Well, I would say this: what they need more than anything, the handset is only a handset. It's the access to financial health and financial wellness that handset represents. The physical object itself is, it could be anything. If it's a wrist phone, or it's a phone that you wrap around your head, it doesn't really matter, right? What matters is the access, and what matters is the ability to create and to manage and to trade your own intrinsic value and that of your community for other value propositions in other communities around the world. So they're missing the point when they say, well, who needs another cell phone? They need to eat. Yeah, but you know what? Charity's not working, right? Charity and debt is a game that is a zero-sum game. If I'm a charitable organization, and I'm not saying that people don't mean well, I'm just saying that based on how we view economics and our current global value system based on fiat, giving somebody something and not allowing them to create their own value is a form of exclusion. And that being able to create your own value is a form of freedom now.
So basically, you're saying that if people have tools, if they have networks that they can link into, then it enables them to create their own markets, which previously they couldn't.
That's exactly what I'm saying. And the need for charity goes away because every community has some intrinsic value, whether it's a good, a service, or an idea.
Mm-hmm. But let's say, right, somebody took 1,000 smartphones and went to a village somewhere where people had no access previously, where they were excluded from global commerce. What would be a first use or a first application of this technology for them?
Oh, that totally depends on what the community actually does and what they have. I mean, the first order of things would be to educate them on how to extrude value from what they have.
Mm-hmm. Well, let's say it's a farming community.
Well, certain things would have to work together. Like, for instance, how do you create a surplus, say, in rice? And how do you then market that surplus of rice to either neighboring communities or, as they get larger, other communities outside of their immediate environment? So in that case, if they have a bunch of different crops and maybe there's a way to pool those and take those to market, that's sort of a broad-based question that would depend very highly on that community and what they do produce, or an aggregation of communities that are within close proximity to each other to then band together and create those, or to use the internet to find like communities that are out there to band together to create a larger entity that then has more value or more product to then move into a marketplace. So it's an open-ended question that's kind of hard to answer without first understanding what the community has to offer or how they might work in relation to other similar communities that could help create a rising tide to lift all boats, right?
Mm-hmm. I think it's a good point, and you have to start somewhere, right? I mean,
Mm-hmm.
I don't think it's feasible that people who previously had no smartphones will all of a sudden, trade cryptocurrencies on Bitfinex.
No, that's not what I mean. I don't mean that at all. Even though eventually they will, once they get, sort of acclimated to their own value proposition and how to make that work in the marketplace, then they'll recognize, other forms of value. And then, it's also a matter of interfaces as well as direct access, right? Because things have to be made, fairly simple. But I'm not disheartened at all. As a matter of fact, I'm very heartened by the fact that, in the 1930s and 40s, the traders on the Chicago Mercantile Exchange or the traders on Wall Street, these are people who generally, they didn't have, advanced educations. Many of them were high school dropouts. Most of them never went to college or left college. And they traded and made, very, very good livings for themselves. Some of them had breakout careers and made millions and then billions of dollars moving forward. People aren't stupid. There are open air marketplaces all over the world, in Cairo, in Amsterdam, in Sao Paulo, or wherever, and even in more further reaches in the hinterlands. There are people who run open air marketplaces all over the world in every possible place. Now, these aren't stupid people. They know how to trade. They know what value is. They know the value of their goods. And if they are able to then have a broader marketplace, what makes us think that they'll be any more, or rather any less astute in how they manage their wares and how they manage their value and how they manage their net worth? That's just going to increase for those people, and they'll be put into this space, and they'll and many of them will do very well. This is what I alluded to before, is that we're going to see great amounts of new wealth, not redistributed wealth, but absolutely brand new wealth pop up in places that you would never have expected, and it could be anywhere. It could be in the Amazon rainforest, but what anybody knows, it could be anywhere.
Yeah, and it's truly democratization of technology.
Oh yes, that's the underlying substrate, right? And then everything else on top of that. Will we have to go through an era of at least a time of instruction and education? Well, yeah, of course. But once people get it, they're just the bulk of humanity they're not idiots. There are lots of good business people who never went to business school. They just haven't had the access to that kind of training, but they do know value and they know how to horse trade, and that's all you really need to know, especially if you're going to be a day trader. That's all you really need to know.
Right. Yeah, interesting point. I mean, were there also maybe promises or things that you imagined would be possible when you read the white paper that you thought back then would be possible, that now, in recent years or months, you had to realize that maybe they're not that within reach?
Well, two things jump out at me when you ask me that question. One is, even though I had quite a bit of experience with corporations prior to being engaged with Bitcoin and blockchain, I came to understand the actual visceral reaction that incumbents had towards the proposition of new forms of value, because that meant that these very well-established corporations had to rethink not only their business models, but even how they use ledgers and how to create this new thing. And so their first reaction was, okay, I don't want to hear about this. This is crazy. Please get out. And this is, if you look at early, forays into this by, say, Morgan Stanley, where Gorman had said a few years ago, Bitcoin is nonsense, right? And now Morgan Stanley, they're opening up a desk, right? So you had this sort of, JP Morgan, all of these, large incumbents, financial incumbents, that didn't want to hear about this. Jamie Dimon, right? Really going out against Bitcoin at every possible turn, but they're only seeing one slice of this. So the pushback was something that I expected but didn't understand until I got into it, how deep that pushback went into a person's core value system.
Right.
Because Jamie Dimon, his whole life, let's use him as an example. I'm not singling him out as an individual, but as an example, his whole life is built on, and he's proven very good at it, the accumulation of capital and the creation of capital in the fiat system. So his entire value set, his home's decor, his family, the kind of lifestyle he's chosen, these are value choices, value propositions, and they're very personal. So the idea of access, peer-to-peer access to capital, peer-to-peer creation, new value creation that he doesn't understand is threatening to his very existence. And we found that to be something very interesting about this space, that it's a revolution not just of value itself, but of human values. What happens when, say, a small tribe of people, say in sub-Saharan Africa, say the Maasai, who use a lot of cell phones, by the way, all of a sudden, find value in some land that they have, and they start extruding that, and that becomes hot, and all of a sudden they're awash in money, right?
Yep.
What happens to values? What happens to human values on a global scale? This is going to be the interesting question of our times, and it just reminds me that a lot of what's missing in the blockchain, Bitcoin, and digital currency space, digital token space, is ethics. We're going to have to figure out how to be more humane to each other. We're going to have to figure out how to be more human. The more technological that we get with this, the more being human matters.
But is this something that's missing in the cryptocurrency and blockchain space, or just in general in our society?
I think people have been blinded largely by the ICO movement, and they think of this as a land grab or a money grab, and that has been the case for the past couple of years, but that's going to die down. People are going to begin to see, like they do with everything, like the telephone or the early internet, or the Gutenberg press for that matter. There's going to be all kinds of things. This Cambrian explosion of possibilities are going to, whittle themselves down, through simply Darwinian existence into things that work and things that don't work. And most of the things that are out here simply will not and do not work. But that's part of the evolutionary process. Right? When you have, a million become 5.
It's interesting. I mean, yesterday I heard a talk by somebody who said cryptocurrencies and this whole token economy is so complex for the incumbents to understand that when they actually understand it, it's going to be too late for them.
It's already too late for most of them. The S&P 500 people already acknowledge that in 25 years, none of them will be there. And they'll all be replaced by companies that have token strategies. That's almost a foregone conclusion as far as I'm concerned.
And what do you think will they do? I mean, will there be some kind of rift, an open rift? I mean, now I think many of the incumbents are still trying to kind of, hope that it will die down and that there is a lot of shakeout in the ICO space and Bitcoin maybe never recovers from its crash. But what do you think? Will there be like a more open confrontation at some point?
Well, let me say, number one, that Bitcoin, whether it crashes or flourishes, is immaterial to this movement. It honestly doesn't matter as far as I'm concerned. There'll be a multiplicity of tokens that are holding all different forms of value. Bitcoin being a pretty decent rail that is a great proof of concept. Mm-hmm. Bitcoin was an amazing proof of concept, but to be honest with you, it's like a Model T Ford, right? The Ferraris have yet to be built. But the Model T Ford was clunky. You had to crank it up. Do all kinds of stuff. It used to break down on the road all the time. People would yell at you, "Get a horse," because that's a stupid machine, that contraption. It doesn't make any. What are you doing? Why are you buying something like that? You're wasting your money. You're wasting your time. Yeah, well, Bitcoin's the same thing. It isn't a Ferrari, but it's a pretty good Model T Ford. So that lets us know what's possible. And then after that, we'll start building Ferraris. But there is a natural evolution in thought and in process that we have to go through. The interesting thing is that we're working on internet time. All right, so it may happen faster than, say, the automobile industry. But to get to your question, I believe that a lot of the incumbents will simply be, like you have Goldman Sachs, by the way, who's trying to jump ahead of all of this, right? They're making some big moves. And that's interesting. So maybe they'll survive this. Goldman has a pretty strong survival instinct anyway. But You have others who would simply be bought by larger concerns. We're going to see, Google's, it could be Google, it might not be Google, who can get scale in some of these things. It might be a company that simply trades in digital loyalty points. Do you know that you can have exchanges once this thing proliferates and brands really understand this, and the music industry and the film industry especially understand this sort of value proposition? It'll change the way everything works. And so you'll have huge companies out of nowhere. I was on a panel in Seoul, Korea last week with a young lady who started a company and got $20 million of investment in 35 seconds, no pre-sale. This is the future. You can have incumbents knocked out of the picture within a day.
What's her product? I mean, what kind of product was that?
It's an insurance product. It's an insurance product.
I mean, especially insurance companies are looking into this, and they mostly use blockchain technology, I think, internally currently. They have a lot of pilots going on there.
Absolutely. I mean, I think they're looking at it from actuary tables and things like that, which is a reasonable, solid way to look at it from an internal standpoint. But think of the underwriting experience, right? Lloyd's is who they are because of access to capital and underwriters. So they have a finite member of serious underwriters who have the capital to do that. Lloyd's has built a reputation on that. But what if I now have 25 million underwriters at $50 a piece? What does that do to that equation? Who is empowered now? Who is empowered? And where is the risk really? So risk profiles are changed because it's not as risky a business anymore. Mm-hmm. So there are lots of different ways. And it could be a technology company that takes over Lloyd's spot as top insurer. It is very, very, very possible.
Mm-hmm. Those are very different business models also that I think many of the incumbents cannot even conceive of because they're so out of reach for them with their overheads, with their processes in place.
With their concept of value itself and how value works and those gatekeepers that create scarcity or non-scarcity. And that's a value proposition that's been built over centuries, over the past few centuries, and how money works ever since 1700s or so, right? So this is what's being challenged here. This is the internet age. The 20th century is already gone. It's already left behind. However, most people are still working. If you're working in the 20th century, you're really working in a paradigm shift from the 17th century.
How so? Can you explain?
Because the mechanism of the core constructs underlying how money moves and how finance works was really invented, by the Medicis and even the Knights Templar before them in lending money and what that means and usury turning into interest points. And all of these sort of mechanisms are all, offshoots of that initial flowering from the Enlightenment and a little bit before, mm-hmm. right? So it's just, we've had different technologies that allow us to do things faster. Trading bots are nothing but, the initial Wall Street idea or the original stock corporation in England and the Dutch stock corporations from the 1600s, right? So it's just to do it faster, and they do it, a little bit better with some more algorithms and boom, 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 and but that's ruinous in many ways to how economics really works. So we're entering a different phase now of how we look at value, how we look at economies, and that's what we call the exonomy, right? The exponential economy. That it's still being built. It isn't possible for me to tell you exactly how it works because, and you can laugh at that if you want to, and your listeners may laugh at that, but it's got to start somewhere, right? What we know is that the old system cannot last much longer. We move too fast, and the movement of capital is too strong and too fast to be sustained by the infrastructure that we have set up now. And it's so exclusive to great numbers of people that it creates this rift of have and have nots. It's just getting wider and wider and wider. How long do we in the Western world think that the rest of the world, billions of people, are going to stand for this? How long do we think that we have until people just get up and burn all of this down?
Yeah, what do you think? I mean, how far is that away?
Man, yeah, I don't know, but it's pretty close.
I mean, 10 years, 5 years, 25 years?
It may be in our lifetimes. But certainly, I look at my kids, and I wonder, what their life is going to be like if people have just all of a sudden had enough of it, right? Just had enough. We saw just a little bit of rumbling of that in 2009, right? 2008 to 2010. Imagine if that was a sustained movement, over time, that could become, that's critical path stuff we're talking about. So we need to embrace this phase shift. Not only embrace it, we need to listen to the lessons that the narrative is telling us. Let's include everybody as much as possible in this movement. Let's make sure that we can end scarcity. Let's make sure that we don't have to worry about, people aren't worrying about how they're going to get shoes or where their next meal is coming from or if they're going to have a roof over their heads tonight. If we can do that, then who wants to fight? Who needs to fight? Who needs to burn you down if they have what they actually need? Now, if they want more, they can work for more. But, I'm not necessarily a proponent of universal basic income. I believe that people value what they sweat for a little bit, what they put some effort into. But that being said, the way that we can create value now, especially with the internet, is very different from subsistence farming, right?
Yeah. So it's abundance. I mean, do you think that's what's ahead of us?
Well, if it isn't abundance, it's at least the necessities of life, right? That can be provided, that can be extracted from value propositions that exist right now. Abundance is on a global scale. You would call that abundance, yes. I mean, we have abundance. We just subsidize it, and because of economics, we burn crops that could be used to subsidize farmers. We do all kinds of crazy things that are exact opposite of our own existence on this planet.
Rik, how much of your time did you spend with this technology since 2011?
I have spent literally every day of my life since 2011 thinking about, writing about, speaking about, or helping to develop the technologies that I deal with on a professional basis. There actually hasn't been one day that I've taken off, and I hear this from my friends, associates, and family sometimes that perhaps I should, but it's too important a movement at this juncture to just let it go and forget about it. Really, people who are shaping this space, I think you'd say to a person, probably work every day. And I wouldn't consider myself special in that regard.
Yeah, it's also what I'm observing. And, many people are so much into this like never before in their lives. I mean, was there for you before another technology in the past that inspired you in a similar way?
Absolutely. I actually had the first company in North America to put up an HDTV advertising screen, giant screen. And then I consulted with many of the screens in Times Square that are now, some still exist, some are long gone. But yes, I was very inspired by that movement, by sort of a public information movement. We even had deals with the MTA here in New York to take some of the street performers who were out there with a hat and a license to be on the street and said, look, we'll film you and we'll pay you and we'll put you on these screens, and you don't necessarily have to be out in the street anymore. So we like pioneered that kind of integration between technology and inclusion and sort of, a way to look at how to use technology to create better outcomes, especially financial outcomes for people who, could use it, right?
Yeah, cool. I mean, before, and you said it here again, you have this background in advertising and branding. How do you see the role of promotion, advertising, marketing in this whole space?
Well, the role of advertising and marketing is both fortunately and unfortunately inextricable from the movement itself, because we have to educate, which means we have to market. But also marketing in extremis can give you this ICO explosion that we've encountered the past couple of years. And to be honest with you, and I'll be very honest, 90%, and I think I'm being generous, of those ICOs are worthless in the long run. They now that
98% is the highest number I heard.
But I mean, in terms of what an investor might expect as a return, they're mostly worthless. But that happened in the early internet with IPOs as well, by the way. So we've seen this movie before. But it's also, created sort of an irrational exuberance around the space. So I think that, the marketing needs to really focus on the true benefits of the technology and not just the accrual of capital or the return on investment. Some returns on investment are now going to be qualified and quantified differently. Like you hear people like Brock Pierce and others, by the way, he wasn't the first to say it, but say, the new definition of a billionaire is helping a billion people. Well, that's more on track with what's really happening. And that is the narrative that, though I think those of us who are truly serious in this space, that's the narrative that we adhere to.
Interesting point. I mean, you just said before, we need new metrics to quantify this space, right? I mean, how can you in a way quantify this new economy that's, somewhere on the horizon?
Well, blockchains will help us do that, right? That's the immutable ledger. So once we understand the metrics that we're actually looking for, and that changes from sector to sector, then we'll be able to actually quantify the benefit, because we'll see change over time, month over month, year over year, community over community, et cetera. But those are all line items that are going to have to be baked into this that are just starting to be understood as a necessity.
Mm-hmm. But if we, for example, I want to follow up there a little bit more. I mean, let's say we look at GDP or something similar. Is there some metric, where we can understand how big this whole ecosystem is going to be? I mean, for example, network value or things like these. I mean, is there anything just tangible that, might convince people to understand how big this is going to be?
Well, if you look at Facebook, that actually it has built a network value of many billions of dollars based on binary, meaning, either yes or no sort of interactive propositions. I comment on your post, someone comments on my post, very binary stuff, is now worth, it could be worth $1 trillion at this point. Think of in terms of trillions. Think in terms of trillions of untapped, of unrecognized value in this world, all of a sudden flooding into the marketplace, all of a sudden meaning within the next 20, 30 years, completely changing the face of economics and what we think value is. That's the closest metric I can put to this, is there are trillions of dollars on the table, not billions. The billions are old hat.
Well, billions, I think we're already there.
We're already there. We're already there at billions. Already there. Yeah.
Mm-hmm. Cool. Rik, if there was no Bitcoin and no blockchain, what do you think would you be doing?
More than likely, I would be in the. That's a good question. I can't even think of myself not doing what I'm doing. So I'm going to take a stab at this. More than likely, I would be creating content that would engage people towards social benefit. I'd be trying to find a way to create monetizable events I'd be doing something very similar without this technology. Let's put it that way. I'd be trying to use existing technology to create experiences and opportunities for greater financial inclusion and for a greater inclusion in general in the totality of humanity and how we deal with each other. But without this technology, I don't think that we could, talk about a revolution in values, in human values globally, the way that we can speak about it with this technology. So it's much, much bigger than what I would be doing were I not involved.
Mm-hmm. Mm-hmm. Cool. If you look back on your career, is there anything you'd do differently today?
All roads led to this. So while there's some things that I would have done a little bit differently, like some meetings I would have held in my first company or iterations, I can't say I regret anything. I believe that everything that happened for a reason, and it brought me to my initial understanding, my own personal understanding of this space when I was introduced to Bitcoin, and that then colored and affected my stance and my position in the space now. So I actually am really grateful for everything I've been through, whether good or bad, that led up to this point. because it brought me to a space where I truly feel I need to be, and that I believe truly makes a difference in how humanity moves forward in the 21st century.
Cool. What's on the horizon for you in the next 6 months, 12 months?
Agentic itself is rebranding. We're building out a new platform that we will be announcing fairly soon that includes thousands and thousands of players in the space. It is a rather large undertaking, but we've been setting it up now for a few years and methodically biding our time and planning and watching the evolution of the space and tweaking it as it goes along. But I think that we'll have quite a few surprises for the global community towards the end of this year that will be welcome in the space and will help provide more tools to affect what we see as the future of our existence here on Earth.
Cool. I definitely wish you best of luck. Rik, this was
Thanks,
really
Manuel.
fun. And thanks so much for taking time today.
It was great talking to you as always. I really enjoy interacting with you whenever we get together. And hopefully it makes sense to some people and encourages others to act in the space. Thanks a lot.
Thanks so much for joining us today. More info on our guest and our sponsors is in the show notes of this episode and on the podcast website, theblockchainandus.com. To help people find this podcast, it's important that you download, subscribe, and give it a top rating and review on iTunes or on the podcast platform of your choice. I'm Manuel Staggers, and I thank you very much for listening.